Welcome back to the next vault. Today, we're diving into one of the most famous names in global finance, the Dow Jones Industrial Average, or simply the Dow. But what exactly is the Dow? Why does it matter so much to investors? And is it still the best way to measure the stock market in 2025? Let's break it all down. The origin of the Dow was created back in 1896 by Charles Dow, a financial journalist who co-founded the Wall Street Journal. At the time, it included just 12 industrial companies. Think railroads, oil, and steel. The idea was simple. Take the stock prices of America's top companies, average them out, and you'd have a snapshot of the economy. Fast forward to today, and the Dow has expanded to 30 major companies spanning technology, finance, healthcare, and more. How it actually works, here's something surprising. The Dow isn't calculated like most indexes. It's a price-weighted index, which means companies with higher share prices have more influence. For example, if a high-priced stock like United Health Group moves, it can sway the Dow far more than a trillion-dollar company like Apple, whose stock trades at a lower price. This makes the Dow different from broader indexes like the S&P 500, which are weighted by total market value. Why it matters, despite being only 30 stocks, the Dow remains a global symbol of U.S. economic strength. When the Dow rises, news anchors cheer. When it falls, headlines scream. Investors worldwide use it as a barometer of market confidence. It's also the basis for countless mutual funds and ETFs. So when you invest in the Dow, you're investing in some of America's most established companies. The Dow in 2025. So, where does the Dow stand today? As of mid-2025, the Dow has been riding the wave of strong tech earnings and resilient consumer spending. Companies like Microsoft, Apple, and Caterpillar are driving gains, while healthcare and industrials provide balance. The index recently touched new all-time highs above 44,000, reflecting optimism despite inflation worries. At the same time, critics argue the Dow is outdated, too narrow, too skewed by price weighting, and not representative of the broader innovation economy. Risks and criticism. There are three main criticisms of the Dow, only 30 stocks. In a world of thousands of publicly traded companies, it's hardly the full picture. Price-weighted bias. A $500 stock can outweigh a trillion-dollar company. Slow to adapt. The Dow has historically been late in adding tech giants and removing declining companies. This means the Dow is more of a symbolic index than a perfect tool for modern investors. Should you invest in the Dow? If you want stability, blue-chip exposure, and steady dividends, Dow Jones ETFs can be a safe way to play the U.S. economy. But if you're looking for innovation, growth, or a diversified portfolio, the S&P 500 or Nasdaq may give a clearer picture. In short, the Dow is great for history and tradition, a global indicator of confidence. But it's not the full story of America's stock market in 2025. Final thoughts. So, is the Dow still relevant today? Absolutely, just not as your only guide. Think of it as the heartbeat of Wall Street. It's quick to reflect market moods, but it doesn't capture the entire body of innovation. The Dow matters, but it's only one piece of the investing puzzle. If you found this breakdown helpful, hit like, subscribe, and comment below. Do you think the Dow is outdated or still the king of stock market indexes? Thanks for watching Next Vault, and I'll see you in the next deep dive.